In a decisive move that could reshape the landscape of cryptocurrency regulation in the United States, President Donald Trump has announced the formation of a cryptocurrency working group. This initiative aims to draft new regulations for digital assets and explore the establishment of a national cryptocurrency stockpile, effectively signaling a sharp pivot from the previous administration's regulatory stance. The executive order issued on Thursday comes as part of Trump's campaign promise to become a crypto president and support the burgeoning digital asset market. It mandates that banking services for cryptocurrency companies be safeguarded, addressing concerns from the industry about regulatory pressures that have reportedly led banks to sever ties with crypto firms. Additionally, the order explicitly prohibits the creation of central bank digital currencies (CBDCs) in the U.S., which could potentially compete with existing cryptocurrencies. Trump's administration aims to paint a more favorable picture for digital assets, in stark contrast to former President Biden's approach, which prioritized consumer protection and regulatory compliance. During Biden's tenure, the U.S. Securities and Exchange Commission (SEC) aggressively pursued lawsuits against major crypto exchanges like Coinbase and Binance, alleging violations of securities laws, a stance that has drawn sharp criticism from industry proponents. The crypto community has welcomed Trump's latest executive order, interpreting it as a clear endorsement of the sector. Nathan McCauley, CEO of Anchorage Digital, remarked, "Today's crypto executive order marks a sea change in U.S. digital asset policy." He added that it represents a significant first step towards establishing consistent regulatory frameworks that could propel cryptocurrencies into the mainstream. As part of this initiative, the working group will include key financial regulators, such as the Treasury Secretary and the heads of the SEC and Commodity Futures Trading Commission. Their task will be to develop a comprehensive regulatory framework addressing various aspects of digital assets, including stablecoins, cryptocurrencies pegged to traditional currencies like the US dollar. Another intriguing element of the executive order is the proposal to evaluate the creation and maintenance of a national digital asset stockpile potentially sourced from cryptocurrencies seized through lawful enforcement actions. However, the specifics of how such a stockpile would be implemented remain unclear, with some analysts suggesting that congressional approval might be necessary for its establishment. In tandem with these regulatory developments, President Trump's World Liberty Financial (WLFI) has reportedly amassed over $388 million in cryptocurrency holdings, including substantial investments in Ethereum and other digital assets. This aggressive accumulation underscores the administration's commitment to fostering a robust digital asset ecosystem. Despite the optimism surrounding these initiatives, market reactions have been mixed. Bitcoin reached a record high of $109,071 on Monday before settling around $103,000 as of late Thursday. The fluctuations reflect ongoing investor sentiment in a market characterized by volatility and uncertainty. Moreover, the crypto sector has witnessed substantial movements, such as the transfer of over 29 million XRP to Coinbase, which has sparked speculation about liquidity adjustments ahead of potential market shifts. As XRP prices hover around $3.13, analysts are closely monitoring for signs of significant price movements in the coming days. As the Trump administration embarks on this ambitious regulatory overhaul, the implications for the cryptocurrency market could be profound. If implemented effectively, these measures may not only stabilize the industry but also attract institutional investors seeking clarity and security within the digital asset space. The coming months will be crucial as stakeholders await the working group's recommendations and assess their potential impact on the future of cryptocurrency in the United States. As the cryptocurrency market continues to fluctuate, Bitcoin's performance remains a focal point for investors and analysts alike. Recent reports suggest that short-term holders of Bitcoin are facing significant challenges in realizing gains, raising questions about the overall market dynamics and the potential for a bearish phase in the near future. According to data analyzed by cryptocurrency experts, the gap in Bitcoin's realized value indicates that many short-term holders are struggling to secure profits. This trend reflects a broader issue within the market. where recent volatility has made it difficult for investors to capitalize on their holdings. The realized value gap serves as a critical metric showing the difference between the price at which Bitcoin was purchased and its current market value. A widening gap can signal distress among holders who may have entered the market during peaks only to see their investments dwindle. In the context of market behavior, these trends highlight the precarious position of many investors. As one analyst pointed out, the current state of the realized value gap suggests that short-term holders are either holding on to their investments in the hope of a rebound or facing decisions on whether to cut their losses. This sentiment resonates with the increasing anxiety surrounding potential market corrections, with predictions indicating a bear market could emerge within the next 90 days. Compounding these concerns are factors such as regulatory scrutiny and macroeconomic influences. The landscape for Bitcoin and other cryptocurrencies is increasingly shaped by policy decisions from governments, particularly in the United States, where regulatory frameworks are still evolving. An analysis from FX Empire forecasts that U.S. policies could play a pivotal role in driving Bitcoin prices, with estimates suggesting a potential surge beyond $110,000 if favorable conditions align. However, despite these optimistic projections, the reality for many investors remains sobering. A report from Bitcoinist emphasizes the importance of vigilance, noting that the market could soon see a downturn if current trends continue. Investors need to stay alert. The signs of a bear market are becoming more pronounced, the report cautioned, urging stakeholders to remain cautious in their trading strategies. Amidst this uncertainty, there are glimmers of hope within the creative industries leveraging Bitcoin and blockchain technology. Platforms are increasingly exploring how cryptocurrencies can empower artists and musicians, facilitating new forms of monetization and engagement. These developments suggest that while the investment landscape may be rocky, the underlying technology continues to foster innovation across various sectors. As we look ahead, the interplay between Bitcoin's market performance and the creative potential of blockchain will be crucial. Investors will need to navigate the complexities of the market carefully while simultaneously keeping an eye on emerging trends that could reshape how cryptocurrencies are used in everyday life. The coming months will undoubtedly be telling as the market adjusts to regulatory changes and the evolving needs of both short-term and long-term holders. In a surprising turn of events, President Donald Trump has made headlines for launching a new cryptocurrency, the Dollar Trump meme coin, just days before his inauguration. This move, celebrated by some as a savvy business venture and criticized by others as a cash grab, has sparked a heated debate within the crypto community and beyond. As supporters gathered at the inaugural Crypto Ball, excitement filled the air, but the news of Trump's digital token overshadowed the festivities and raised eyebrows among industry insiders. The Dollar Trump coin, characterized by its gaudy design featuring Trump's image and the phrase "Fight, Fight, Fight," made its debut on January 17, 2025, while crypto executives mingled just a half-mile from the White House. Initial trading saw the coin's value fluctuate wildly, peaking at approximately $73 before dropping to around $30 shortly thereafter. Critics within the crypto sector expressed disappointment, suggesting that Trump's timing was less about supporting the industry and more about lining his own pockets. Andy Bear, managing director at CoinDesk, remarked that such meme coins are definitionally and unashamedly frivolous, lacking any real utility. While the Dollar Trump coin certainly generated buzz and significant trading volume, it also drew skepticism. Some industry leaders fear that Trump's involvement in meme coins could undermine the credibility of cryptocurrencies as they strive for legitimacy. Just because you can, it doesn't mean you should, Bear added, highlighting concerns about the perception of seriousness in the crypto discourse, especially as the industry seeks constructive engagement with regulators. The political backdrop adds another layer of complexity to this situation. Trump's administration has been warmly received by many in the crypto sector, as the president has promised to ease regulatory burdens that were seen as suffocating during the previous administration. Bill Gurley, a venture capitalist, stated they couldn't have imagined a better outcome than they just got in the past 48 hours. referring to the favorable executive orders Trump signed shortly after taking office. These included directives aimed at promoting digital asset adoption and establishing a working group to explore the potential of seized cryptocurrencies. However, the Trump coins launch was not without its controversies. The Trump family reportedly holds a significant portion of the coin's supply, raising ethical questions regarding the intersection of personal profit and public service. Critics, including prominent lawmakers, have called out the potential for rug pulls, a term in the crypto world denoting schemes where creators cash in on coins and abandon them, leaving investors with worthless tokens. Meanwhile, Trump's wife Melania also launched her own meme coin, Melania, further complicating perceptions of the family's motives. The timing of these announcements fueled speculation about the couple's intentions, with many feeling that they prioritize personal gain over the interests of their supporters and the crypto community. The price for Melania has plunged over 80% since its introduction, reflecting the highly volatile nature of the meme coin market. Despite the initial excitement, many Trump buyers have faced losses, with recent analyses indicating that a significant number of new investors were inexperienced, entering a market fraught with risk. This situation serves as a reminder of the volatile nature of cryptocurrencies, where fortunes can be made or lost within hours. Reports suggest that as many as 100,000 investors suffered losses, reinforcing concerns about the financial literacy and preparedness of retail investors entering the crypto space. As the dust settles from this unprecedented launch, the implications for the future of both Trump's presidency and the cryptocurrency industry remain to be seen. Will the president's actions help legitimize digital assets in the eyes of regulators and the public, or will they further entrench the negative perceptions that have long plagued the sector? Crypto enthusiasts hope that the administration's pro-crypto stance will pave the way for significant advancements in digital asset regulation, but the recent events have cast a shadow over that optimism. As Trump continues to draw attention through his various ventures, the crypto market watch is closely aware that every move he makes could influence public sentiment and investor behavior in the ever-evolving landscape of digital currencies. How this relationship will unfold in the coming months will be crucial for both the Trump administration and the future of cryptocurrency, in a significant development within the cryptocurrency landscape. President Donald Trump's World Liberty Financial WLFI has amassed a remarkable crypto portfolio exceeding $388 million, driven by recent acquisitions of Ethereum ETH and Tron TRX. This surge in digital asset holdings was reported by the blockchain analytics platform Arkham, which highlighted that WLFI has now become one of the top 0.1% of Ethereum stackers following its aggressive purchasing spree. On Inauguration Day, WLFI made headlines by purchasing $47 million in Ethereum, along with substantial investments in Wrapped Bitcoin, WBTC, Aave, AAVE, Chainlink, and Athena ENA, each valued at $4.7 million. Notably, this strategic accumulation coincides with Trump's broader efforts to reshape the regulatory environment surrounding digital currencies, as he recently signed an executive order aimed at fostering the growth of the crypto industry in the United States. The executive order, titled Strengthening American Leadership in Digital Financial Technology, signals a pivot away from the restrictive policies of the previous administration. It mandates the establishment of a working group tasked with evaluating the potential for a national digital asset stockpile and setting clearer regulations for cryptocurrencies within 6 months. This initiative is seen as a crucial step toward legitimizing digital assets and encouraging their adoption. The working group shall evaluate the potential creation and maintenance of a national digital asset stockpile and propose criteria for establishing such a stockpile, the order states, emphasizing the government's commitment to responsible growth in the digital asset space. Analysts view this shift as a potential catalyst for revitalizing investor confidence in cryptocurrencies, which have faced significant headwinds over the past year. As WLFI enhances its crypto portfolio, the broader market is experiencing a notable uplift. Ethereum in particular has seen its price rise by 7.5% in recent days. Influenced by a strong recovery across the cryptocurrency market and increasing institutional interest, particularly in Ethereum exchange-traded funds ETFs. The influx of $396.5 million into US-based spot Ethereum ETFs over the past week highlights a growing confidence among institutional investors, further buoying Ethereum's price trajectory. Technical analysis indicates that Ethereum is currently trading above critical support levels, with many analysts optimistic that it could push towards the psychological resistance level of $4,000 in the coming months. This potential growth is supported by a robust demand for Ethereum driven by the innovative projects emerging within its ecosystem, including Roblox, a new gambling platform leveraging Ethereum technology. The interplay between Trump's policy changes and the market's response could lead to a more favorable environment for cryptocurrencies as investors adapt to the evolving regulatory landscape. However, challenges remain, particularly as the market continues to grapple with the fallout from previous regulatory uncertainties. Looking ahead, the future of Ethereum and the broader cryptocurrency market appears promising, with the potential for further gains and increased institutional adoption. As the landscape shifts under the influence of new policies, stakeholders will be keenly observing how these developments unfold and their implications for the market. With the groundwork laid for a more supportive regulatory framework, the stage is set for a new chapter in the evolution of digital assets. In a rapidly evolving digital landscape, clarity is paramount, as misinformation can easily lead to confusion among investors and stakeholders. The Now Corporation (OTC) NWPN recently issued a statement to clarify its position amid swirling rumors regarding its alleged partnership with Solana, a prominent blockchain platform. The company categorically denied any affiliation with Solana or any cryptocurrency ventures, including the purported The Now coin. This announcement comes on the heels of the identification of a fraudulent social media account claiming to represent The Now, which has been spreading misleading information. In their statement, The Now emphasized their commitment to sustainable energy solutions through their subsidiary Green Rain Solar Incorporated, which specializes in urban rooftop solar installations. The company urged stakeholders to rely solely on official communications disseminated through verified channels to mitigate the risk of falling prey to misinformation. Any statements or posts made by this account are unauthorized and should not be considered representative of the company, The Now asserted, highlighting the importance of distinguishing between legitimate news and fraudulent claims in today's digital age. As The Now navigates this misinformation landscape, the cryptocurrency sector continues to witness significant developments. XYZ, another player in the digital currency space, recently raised an impressive $5.5 million in its pre-sale phase, garnering attention for its ambitious goal of achieving a staggering 30,000% growth potential. Industry analysts have likened its prospects to established cryptocurrencies like Cardano and Solana, suggesting that XYZ could redefine the meme coin market, particularly with its unique integration of sports and meme culture. This burgeoning interest in new cryptocurrency projects seems to reflect a broader trend within the sector, where various assets are vying for investor attention. Notably, the Solana blockchain has been highlighted by Multicoin Capital as a potential contender to surpass traditional finance giants like the NYSE and Nasdaq. With a market value exceeding $100 billion, Solana is noted for its impressive transaction speed and low fees, which could make it an attractive option for both consumers and businesses looking to engage in decentralized finance DeFi activities. Multicoin Capital's co-founder Kyle Samani articulated that Solana's innovative architecture allows for reduced transaction fees by as much as 90% to 99%, which could drive mass adoption. As the DeFi ecosystem continues to grow, this low-cost structure may position Solana as a leading platform for peer-to-peer transactions, thereby enhancing its liquidity and overall market presence. Furthermore, Solana's multiple concurrent leaders framework is credited with facilitating faster transactions, setting it apart from other blockchains. As January unfolds, cryptocurrency enthusiasts are also keeping a close eye on emerging coins, including a new meme coin named Panshibi. Positioned for potential explosive growth, Panshibi aims to capitalize on the current wave of interest in meme-based currencies, with projections indicating substantial gains as it moves through its pre-sale stages. The excitement surrounding Panshibi reflects a broader trend of investors seeking out assets with high growth potential in a market characterized by volatility and rapid change. In conclusion, as the cryptocurrency landscape becomes increasingly complex, companies like the Now are emphasizing the importance of accurate information amid the noise of social media. Meanwhile, the rise of new projects like XYSverse and Panshibi alongside the continued evolution of established platforms like Solana suggests that the digital currency sector is poised for further transformation. Stakeholders and investors must remain vigilant and informed as they navigate this dynamic environment, anticipating how these developments will unfold in the months to come.